going into our afternoon and then into the end of this week. This morning we have had unemployment claims coming back at 225,000. That was a miss. So it was higher, a larger number of employers or a larger number of individuals who filed for unemployment insurance over the past week than was expected. Now that's bad news. Bad news is good. Why is bad news good? Bad news is good because it pushes rate hikes out into the future. And so you'll notice here that the Fed Fund futures, as we were going into the morning, they were pricing in a December and then January 2027, so December of 2026, and then January of 2027 rate hike, and it was pushed further out. And so we are in an environment now where good news is bad and bad news is good. Bad news is good, and that's part of what was going on here this morning. On top of an environment here where we do have a bit of a beach ball underwater moment, and then when we're thinking about this from the perspective of our leading indicators, the VIX is still inside of short setups. Now, I think this is probably the big story here, is that the U.S. dollar is the instrument of the year right here, and we know that every fourth year we have this massive dollar squeeze, and you benefit from holding dollars, being short the euro specifically, long DXY. And this is an incredible setup. I always zoom out here. We do this 3 or 4 times a day, but this is the monthly time frame. You can see 08 dollar strength, end of 2011. This was another dollar strength trade. The end of 2013. This is for many what most people consider the first crypto or Bitcoin winter. And then you have the autumn of 2017. Again, massive dollar squeeze. We called this the nightmare before Christmas. That was part of that dollar strength trade. Then we have the end of 2021. Well, the highs in the stock market were January of 2021. And then we have this, of course, low that we have. And the indices have been making many new highs in nominal terms. In nominal terms, they are making many, many new highs. But the dollar is ripping. And this is the year of that dollar rip. So here's the monthly support level. And then we have a weekly double bottom. And then inside of that, we have a daily long setup, which we double bottomed in. And then as we were going into the end of last week, we had our pullback into our 38.2% line. And this is the most technical part of the market. Pullback number 1 last week, Friday. Pullback number 2 to targets Monday. Pullback number 3 to targets yesterday. We're in the process of pullback number 4. The targets, and there are 2 targets. There's a daily long target at the 99,995 up here, and then the smaller intraday 4th pullback from lows since last week, Friday, as a target up here at the 99,741. The euro has the inverse setup to this. This is the most technical part of the market. This, and of course the euro is inside of this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.